Okay, folks, this is Brandon from Galaxy Doc Market. Welcome. Today is January 10th. Oh boy, 2026, Saturday, about 9:51 a.m. as we bring you this week ahead video. And this is for January 12th to 16th. So, as the title suggests, we are entering into the critical week of this January effect. And for those of you that doesn't know, January effect is institutional buying, portfolio rebalancing on the first 2 weeks of January, which creates an artificial buying pressure as well as some selling ahead of the New Year's, but mostly a bullish effect that may or may not be telling the full story about the health of the economy and the stock market. So we'll discuss that and we'll talk about how we're going to be positioned. As you can tell, there's some gold and silver coins right here, and mostly we'll be talking about that and our strategies going forward as we wait for the January effect to end. Okay, so we are entering into the critical week. Here's the disclaimer for those of you following me on X.com and YouTube. Please pause it and read it. If you agree, please move forward. And of course, thank you so much for following us. Check us out. We have great content on a daily basis as needed. Some things that you will not get unless you're part of our membership group. But if you're not, this is the best way. And also, like us, comment, and subscribe on YouTube. All right, so the coming week, I'm talking about January 12th all the way to January 16th, is going to be a crescendo of institutional buying, which is called the January effect, as we talked about. We need to be watching silver and cryptos in the backdrops of all this geopolitical chaos and domestic chaos that is going on in U.S. and abroad. War drum beats louder and louder each day. And I told you in the past that bankers take you to war. And this is clearly evident on the things that has happened in the last 2 weeks and especially during the New Year's. All right, so I'm not going to beat around the bush, okay? And let's go over some newsworthy items that are going to be focused on our trading strategies going forward. And number one is that Trump wants Greenland after Venezuela, and it is always for narco-terrorism or for national security. Take it as you will. There are other things going on in Greenland that meets the eyes, and you can kind of see how NATO is fractured, right? And you all of a sudden see even Italian Prime Minister Giorgia Meloni basically threatening military action against United States for any type of intervention in Greenland. The question we want to ask is, what's in Greenland? Is it a frozen piece of land with 60,000 people living there? Or what is going on there that has our quote-unquote NATO allies up in arms about the situation? Okay, and how strong is the alliance in NATO, and should United States even consider supporting the NATO alliance? Okay, the NATO alliance is about to become enemies, it seems like. So take it for what it is. Under the guise of national security, and it may or may not come out to be true. All I can say is that the European Union, there's a lot of weird stuff going on over there in terms of censorship. They obviously do not want peace. There is definitely push for war. Now the European Union wants to have war against the United States over Greenland. And of course, Trump, becoming the protectionist that he is, as he's setting up the United States for bankruptcy of our untenable $38 trillion of debt, okay, is becoming more and more aggressive in terms of acquiring land resources in preparation for the debt default, in my opinion. Okay. So, the other thing that we need to understand is that when a country debases their currency, prints money out of thin air, continues to issue debt that nobody wants, and then ends up buying them back with their own currency that they print, and then trying to control any of the market forces that are in play, is a highly inflationary event. And I've always said that the only way out for United States is debt default through hyperinflation. And there is a new monetary system that is coming on the backs of stablecoins and cryptocurrency and blockchain, as we talked about ad nauseum. And so, but this is really the crux of that argument. And basically, Trump is basically going to control this U.S. mortgage rates by buying back those mortgage-backed securities. Okay, this is basically quantitative easing too. And if you think that this is going to have any effect on quote-unquote affordability of homes, yes, it may bring down temporarily the mortgage rates, but it will not bring down the home prices, which is going to be even more unaffordable. Okay, but that's what desperate regimes and desperate countries do at the end of their effective currency cycle. Okay, here's something from Benny Johnson, and he's saying that he's announcing a $200 billion purchase of mortgage bonds to push mortgage rates down immediately, and this is not a good thing. This is how you make housing great again? No, it's not. This is not the way you make housing great again, because it effectively increases additional and profound inflationary pressure on the housing prices. And the rich get richer and poor get poorer. Okay, it will do nothing for the affordability index, even with the proposed 50-year mortgage. I mean, this is insanity. Okay, so the other thing is that this is somewhat controversial. I think credit card companies are evil, but he's talking about now rate controls. This is what communist regimes do. They control rates and they artificially inject stimulus to make everything seem okay. The problem is that capping interest rate at 10% is not going to spur American taxpayers and consumers who are strapped to the gills with debt by reducing credit card interest rate from 27, 28, sometimes even 31% down to 10%. This has no net effect of driving consumer demand. Remember my old mantra, if you go back to my videos, maybe 2 years and on, I keep talking about this concept of consumer demand destruction. Once that is destroyed, that does not come back. And this, again, capping interest rate at 10% is going to spur the credit card companies right now dealing with significant amounts of debt default and charge-offs and, all these other things that are going on to start cutting credit line and credit limits, which is going to, I think, exacerbate the problem in the long run. Okay, so that's what's going on. I mean, this is desperation 2.0 at this point, and we got war, threats of war, and actual realities of war taking over other countries, threats of Greenland attacking Mexico, EU up in arms. Our NATO allies are talking specifically about raising military to counter United States. So yeah, Trump should defund NATO, okay, and to be done with it. It would be nothing without United States, and I think Donald Trump knows that, okay? And there's a lot of nefarious and crazy things going on in terms of human freedom and, all of those things that are going on in the EU, especially in Britain, okay? So, you got to fight fire with fire, and, none of them are really viable things. In the end, we're going to have a hyperinflationary credit collapse followed by deflation. Okay, so before we watch this, I want to go over some aspects of our technical analysis. So where are we in terms of the put to call ratio? We are back in. This line did not extend, but we are back into the buy zone, folks. Okay, put to call ratio finished at 0.47, which is a highly bearish sentiment that is going on at the moment. Okay, now let's go into silver because, what else is there but silver? And one thing I want to talk about is look at the monthly chart. Here we go. Oops, you don't want to see my watch list, do you? Okay, that's for members. Okay, so basically, we are having a significant amounts of overhead resistance right at 82.5, and you could see us just on the monthly getting rejected from there. That is our new, next level that we need to overcome at this point. Okay, I don't know why my computer's doing this, but 8250 is something that needs to be overcome. Staying above on a daily basis there will lead us into the 92 to 117 level that I keep harping about. And those of you that don't believe it's going to happen, it's the same way everybody said it wasn't going to happen when I said we're going to have 68 to 82 by end of December. Boom, we got it. Okay. This is kind of the Hunt Brothers minimum measure move that I said we will hit by the end of December. Now we are above there. So those of you that are saying, if you are saying that we're overbought and this is untenable, okay, yes, we have gone straight up, but this is 45 years of suppression in precious metals market illegally, by I might add. It's just the market forces taking effect. Okay, there's bigger moves coming, and I don't know. That doesn't look too bearish to me, do you? So let's zoom out a little bit and look at the weekly and where we are. And this is very, very important. And so we have this bullish candle. And we popped above that 8250, and then they nuclear slammed it down. All they could muster the previous week was come down to the 5 SMA. But really, it was not able to clear this bar. It's basically an inside bar day. And then this week, obviously, we basically came down. It's another inside bar day. So that means that we are range bound. We are range bound at these levels. Okay, this is what I keep telling people, that we're building energy. This is a bull flag, folks. We're going to move higher. Okay, and if you look at the RSI, and everybody's saying the RSI is overbought, RSI is a momentum indicator, okay? It's just going to pull back and then build energy to continue to move higher. We're going to make these higher highs as we speak. And so what are our targets going forward is that we should be looking at 85 to 92 by the end of this week, especially in light of the fact that the spot market backwardation from the futures market. COMEX has no silver in their vaults to meet the delivery demand, and that is growing by the day. You have now the industrials, the militaries, and the consumers fighting over scraps of silver that basically was manipulated. In the meantime, last week, almost 2.3 million ounces of paper silver ounces were shorted. How do you think that's going to end? And of course, there's an article floating around there that I didn't talk about or post, is Toronto Dominion is short silver with a stop loss at 92. Okay, I'll take that bet, folks. Okay, so let's go into the daily. And the daily chart is very, very interesting, partly because we have now a divergence forming on the RSI. You see that? And we're just following up this trend line above this green line, which is 80 EMA. And basically, we're just, pushing above that 8250. Okay, we're just stair-stepping higher. This is what's happening, folks. All right. And no, when a stock becomes hyperabolic, it's, and everybody's going to be calling for it, whether it's bullish or bearish. It's too high. It's going to come back. It's going to correct. And it keeps going higher. It climbs the wall of worry. That's what it's doing right now. Okay. Oops. I don't need that. Okay. Let's look at SPY real quick, because SPY seems to, under the January effect, really pushing that upper line level. And everybody thinks it's going to break out. And maybe we blip up above and come down. However, RSI on this move is negatively divergent. We have these histograms that are basically negatively divergent. On the MACD, we continue to have churning on the CCI, but negatively divergent. Everything has negative divergence. When we look at the PPO ADX, okay, we are basically doing this kind of a situation, right? We have this thing, and then we're doing this. So when we're beginning to make that bearish formation, it's finishing up forming in there. Okay. Now, I'm not suggesting one way or the other, but there are significant economic headwinds, geopolitical events, and hyperinflationary events that are going to continue to put pressure on these overinflated stock market. The air must come out eventually. Okay. Now I'm going to share with you a couple of the things that I'm looking at. One is Ionic. Okay, I am bullish on this actually. And, we finished the week right on that 80 EMA. We're basically forming these bullish divergences. And so this is something that is in our group, and it's something that is volatile. Okay, but for those of you that are looking at quantum computing, this is a very, very good opportunity. For solar, I've been warning about First Solar. It was our number one pick about a couple of weeks ago. And First Solar is just getting started, folks. Okay, it just broke through the 20 SMA and finished below that. That is very, very bearish. Our next target, obviously, is this downtrending slope and down into the lower band, the Bollinger Band, which also seems to coincide with 100 SMA. We have the MACD death cross forming right here, which is significant. Okay, and then we also have everything is bearishly divergent. Okay, folks, this is screaming short because of the silver shortage, and also because Trump just got 390 what is that, million or billion barrels of oil. So it starts to kind of de-emphasize these green energy stocks. Okay, all right, I'm gonna look at Ionic on the weekly. We already talked about that. Sorry, let's go to Netflix. Okay, let's look at Netflix really quick. Okay, this is intriguing because Netflix is very, very bearish, but I think there's going to be probably a little bounce before it comes back down. But these are the levels we're targeting. I mean, there's absolutely no redeeming qualities about Netflix since they've been lying about their subscriber growth and everything else. But expect a little bounce, maybe down up into this 80 MA, okay, or up to this pivot level, and then come back down. Okay, so that's what I have. I mean, silver is on a rampage at this point. Okay, for those of you that are scared about silver correcting, don't be. Cryptos are on a violent and volatile ride. Everybody, we went right back up, and we're just basing right here. And this is the critical buying zone. Okay, I always thought that it may possibly pull back to $1.75. I think that boat sailed, but I'm looking to buy when it hits down there. Right, XDC is the same thing. Okay, we're bottoming and moving higher. Litecoin, same thing. Okay, we're just basically forming this. Everyone probably noticing this possible head and shoulders formation right here. And so we need to look at that very, very carefully. But if it goes down into below this level, right into that 76 into 65 level, I'm a buyer. Okay, Bitcoin, same thing. Okay, Bitcoin already has formed a sort of a head and shoulders formation. Okay, and now it's making another head and shoulder within a head and shoulder. I think we're coming down and offer a significantly compelling entry point. World Liberty is the only one that's sort of been sort of stable, right? Because this is the Trump family's governance token for digital US dollars, and that is a long bull flag that's there. I'm very big on that one. Okay, so that's kind of what we have that I care to talk about. Okay, you need to accumulate these when nobody wants them. Okay, and when they're under pressure. So basically, I'm asking you and telling you and pounding the table that don't be these guys. I have those pictures. I don't post them anymore. Nobody wants them at $1.95, right? But then they're lined up to get it at 1,000. Okay, so here's the bottom line. Greenland is now in focus after Venezuela. Mexico is also warned. Portfolio rebalancing and buying comes to an end this week. Probably by Wednesday, it'll start slowing down. We'll get a truer picture of where the institutions are levered. Remember, it's the retail that holds the bag. In one way, shape, or another, not just retail traders, but it's also the retail savers, investors. Your 401k portfolio is going to be the backdrop in which these institutions dump their shares into. Oldest game in town. Supreme Court decision on tariffs delayed to Wednesday. Okay, and there was a lot of angst about that, but regardless, no matter what they do, as far as if you're a silver trader, it doesn't matter what they do. Okay, inflation is here to stay, and manipulation is coming to an end because now it's a global resources war, right? For many things, not just food, water, but now silver, gold, platinum, uranium, you name it, you got it. Okay. So here's what we're doing. We're continuing to watch gold and silver. Parabolic moves have been basing, okay, which is a building energy to move higher. You expect a violent move higher by midweek. Silver 83 to 92 is in play. Gold 4,500 to 4,700 as this portfolio rebalancing ends, or what we call the January effect. Greenland and Mexico is in focus. War rhetoric continues. NATO, watch them. Silver slam has largely failed, and silver sitting near all-time highs and at resistance. What's going to happen? Backwardation is extreme. I think in Shanghai, it's 1 ounce of silver is trading at $127 an ounce in some places. More stealth QE. Okay, so if you want to fight inflation, you do it by printing more money and creating more conditions for the inflations to rise. Mortgage bond purchase, cap on credit card rates, and banning institutional home buying. Oh boy, here we go. Inflation is theft, and it's here to stay, folks. Get used to it. Okay, the best hedge for that are cryptos, are gold and silver. Okay, and learning how to trade up and down in this very volatile market. So thank you so much for watching. Follow me at galaxy.market. Like us, share us, and above all, comment on YouTube. Okay, and thank you. And let's get some alpha. Oh yeah, by the way, if you want to learn about working with me, you need to email me at coachbrandon@protonmail.com and schedule a consultation. If you want to join my community, look in the profile or description in the link in YouTube and x.com. Otherwise, have a blessed week. Get your big boy and big girl panties on. We're ready to rock. Bye-bye.